Hi everybody, this is Andrew Masters and you're listening to the Market Watch Review. In today's release, we'll cover the following topics. China's stock indices are in the green zone, the strengthening Australian dollar, a weakening Japanese yen, and the publication of the composite ISM index for the non-manufacturing sector of the US economy. We begin today's review with the stock market from China, and for the third trading day in a row, volumes exceeded 1 trillion yen, and today was more than 1.4 trillion yen, which is the highest level since 2015. As a result, it seems as if there's an increased interest for risk. Thus, we are seeing a moderate appreciation of the Australian dollar paired with most currencies. Pay attention to the Australian dollar-US dollar currency pair. The bulls managed to break through the resistance level of 69.70, but the demand around this level remains weak. Therefore, only a further weakening of the US dollar can provide the necessary support for further growth of the currency pair to 70.60. I will also draw your attention to the general weakening of the Japanese yen during the Asian trading session. There are several reasons for this. Firstly, a general decrease in interest for safe haven assets, and secondly, Japan has suffered from torrential rain, which caused the destruction of some settlements and claimed lives. All this puts some short-term pressure on the Japanese yen. Now let's move on to the Australian dollar-Japanese yen currency pair. Despite the breakthrough of the psychological resistance level at 75, the activity of buyers above this level was very weak. Nevertheless, there is still a risk of further strengthening of the pair to a yearly high of 76.50, and this scenario will be implemented with a further increase in interest for risk. Now let's move on to the American trading session and the upcoming publication of the ISM Composite Index for the non-manufacturing sector of the US economy. A figure above analyst expectations and the index returning to 50 points may provide short-term support for the US dollar. Consequently, the release of unexpectedly weak data may cause a round of selling in the US dollar. Since there will be no more important macroeconomic publications today, this release may have an impact on the volatility of US dollar trading. Nevertheless, traders and investors need to closely monitor Donald Trump's tweets and any information regarding trade relations with China and the COVID-19 pandemic. That's all for me. Closely monitor the news background and be prepared for all the surprises of the market.